Hi there. Thank you for tuning into our podcast. I'm Dean Heskin. We are bringing to you now our podcast, The Secret War on Cash, where we take a look at some of the changing dynamics that are taking place in the world around us, economically and financially speaking. And Chris, as CC, our producer, I just mentioned as before we got on here, he likes the where we drew this article from, Wolf Street, and it is kind of a I obviously you think of the what was it, The Wolf of Wall Street is
Wolf of Wall
was
Street.
that
Yep.
movie a little debaucherous, but what are we talking about here? Stock market leverage blows out, and everyone is talking about the AI bubble, proclaiming it or
hmm
denying it, but this is what it looks like from the leverage point of view. Now, AI has taken the market by storm over the course of the last couple of years in particular. We talked about a few podcasts ago how Nvidia represents, I mean, literally the value of it is the equivalency of the GDP of many countries out there.
Yeah.
And bottom line is that that's one thing when you look at an emerging company that has an emerging technology and that is growing like Nvidia did, or like this whole segment of the market AI has. But then you throw into this equation the leverage factor, and that has provided or proven to be very problematic for various other companies at different times throughout the course of the stock market's history.
Mhm.
So as we look at this and the leverage blows out, leverage meaning, for those maybe not familiar with the term, people who are not actually buying stock when they invest into it, but they're actually borrowing money to buy on it. So what's the problem with this, Chris? What's the vulnerability, and what might be the potential fallout from it?
Yeah. Well, what they're pointing out here is that margin debt can be looked at to sort of predict big market crashes or problems within the market, I guess I should say. And I think a simple way of putting it is, a market might be oversold and in a bubble if people are going out and borrowing money and throwing money that they don't have into the market to try and make quick profits. And the more that happens, I kind of liken it to a casino. It's when the stock market certainly has good solid principles and reasons to invest in it properly. But when people are going out and taking loans and going into the casino to try and make money or a quick buck, that's when you really have to start being concerned. And what they point out here is that a similar pattern of spikes in people buying on margin happened right before the dot-com bust in 2000, the financial crisis in 2007, a drop we had in 2018, and a drop we also had in 22, albeit those last two not as big as the first two. And so they're just kind of pointing out these parallels and saying, look, AI is in some level of a bubble. We have these indicators that are saying, the end of that bubble could be near, and they're warning people that this is a fragile market where there could be some big speculative money being lost to a drop.
Right. Well, it's speculative. Yes, but also, I would venture to say or guess that it will have an effect on pensions, managed accounts, et cetera, et cetera, et cetera. People who are not perhaps looking for that element or degree of speculation, but yet they're
Right.
in it. And in fact, my brother-in-law being one, a couple years ago when he was looking at it, wanting to get into it, I told him I'd be cautious.
Mhm.
And in fact, I'm going to St. Louis this weekend to go see him. And the bottom line is it has performed, but yet, if once that the other shoe drops, if you will, that's where the
Yep.
trouble could come from. And that's where, if
Mhm.
we look at the second article here that CC is going to put up, titled "Why This Analyst Says the AI Bubble is 17 Times Bigger Than the Dot-Com Bust," which we've talked about before.
Mhm.
But what I found interesting in this commentary here, that I think it was the third paragraph down. Well, here it is, third paragraph down. Just this week, the Financial Times wrote that 10 AI startups with not a dollar of profit among them have gained nearly $1 trillion in market value over the last 12 months. So
Yep.
you're talking about, and this is not a new phenomenon. We've seen this throughout the history of the market, where certainly companies come out, they have an emerging technology, they're not profitable, and yet they continue to grow or gain in value. But you're talking $1 trillion amongst just 10 AI startups that are not
Yep.
profitable. When you
Yeah.
start looking at some of the other companies out there as well, this is just one stone in the creek, if you will. And so, kind of to your point, at what point does reality set in, and now all of a sudden that this lack of profitability and or maybe an exhausted AI run, are we going to see something like that dot-com bubble where which that dot-com bubble, when it burst, that never came back again.
Right. Yeah, I think we will see something like that most certainly here. It's hard to know, obviously, which companies, but if you have 10 startups in this specific example, posting $1 trillion in value in the market, and none of them are making any money, and a lot of this is based on the fact that people have seen Nvidia do well, and so they're looking for the next Nvidia, right? And so they're pumping money, and a lot of it borrowed money, into similar companies hoping for similar results. And that's a recipe for disaster. It doesn't mean that one or two of them may not hit or get by, but the majority of them are likely to fail. And I think that's when we're going to see some big problems, because it will affect the entire market. And even somebody that isn't specifically, like you mentioned, wanting to be speculative and investing in this, they probably aren't aware that their pension or part of their 401k is invested in funds that are very much tied to a lot of these companies. So people really have to be careful, and kind of hang on for the ride. I think we are going to see some bumps here in the coming year.
Right. Well, and to be clear, I mean, I think AI is here to stay. I mean, we use it all the time. I used it a few times, even just today.
Hmm.
But with that being said, when I say used it, it's all over, but specifically
Yeah.
Grok and ChatGPT, and
Hmm.
it's here to stay for sure. But again, when you see a number like 17 times bigger bubble than what we saw in the dot com, I
Yeah.
lived through that dot com bubble, and it was ugly. I mean, you
Yep.
saw name brand companies going bye bye, and you saw people who had literally their entire savings wiped away from them, their
Yep.
retirement accounts, etc. And it's hard not to kind of chase that, especially at a time like right now, when you have inflationary pressures. The grocery store costs more, the gas pump costs more, your energy bill costs more. There's a need and a gap there where, okay, where can I make up for this shortfall in my
Right.
finances? And I get it. And that's where I can't say this enough. We say it every podcast. Diversification is the key. We're not talking about gold today, but gold is busting through records left and right. And
Mhm.
it's great to see that. But by the same token, unfortunately, it is more somewhat of a reflection of just the weakened state of our economy right now. As gold's performing, it's really kind of more, again, reflective of the fact that there is just a lot of financial vulnerability out there. So, for those of you
Indeed.
tuning in, if you haven't contacted our office to receive a copy of our Secret War Report, I strongly encourage you to do so. There's no obligation for it. You can get some information about how you can learn a little bit more about diversifying into metals as well. Again, no cost, no obligation to you. You can do so by calling us, excuse me, at 1-800-289-2646, or you can text us at that same number if you'd like. And we also encourage you to follow us online. You can do that at www.swissamerica.com, where you can see the same information or the same offers being provided there, that you can just easily register, submit a thing for it. Again, no cost, no obligation to you. So thank you for that, Chris. For those of you tuning
Yep.
in, thanks for doing so. For those of you who are subscribed to our podcast, nice to see you again. And for those of you who are not, we hope you do so we can see you more in the future. Have a great day and a great rest of your week.
Thanks. Take care.